Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today is Thursday, July 24th, 2008. The Reserve Bank of New Zealand surprised economists and traders yesterday afternoon and lowered rates by a quarter point, causing a quick knee-jerk reaction of Kiwi selling. Reserve Bank Governor Ballard said, with the economy weakening and borrowing costs levied by banks rising as a result of turmoil in financial markets, the rate cut should help alleviate some of those rising costs to firms and consumers. The Kiwi-US dollar pair was already falling yesterday prior to the decision, and the surprise cut caused a quick slide in the pair. By New York trading, the pair was trading near 0.74, a 200-pip slide from Wednesday's session open. The Japanese trade surplus shrank to 140 billion yen in June. For the first time in 4 years, the pace of exports was slower compared to a year ago, falling 1.7% on the year. Exports have been slowing to the U.S. and Europe, but they have now been joined by emerging economies as interest rates go up around the world to combat inflation. In Germany, the IFO Business Climate Index took a plunge in July, with the overall index declining almost 4 points to 97.5 from June's 101.3. Current conditions and future expectations both deteriorated, and the overall reading was the lowest in 3 years. Preliminary data showed activity in the German manufacturing and services sector expanding, as the PMIs for both sectors was above the 50 level. The manufacturing sector saw a decline from June as global demand for German exports weakens. Services expanded, bucking the trend in other parts of Europe. Looking at the Eurozone as a whole, conditions are worse as both sectors were in contraction. The manufacturing PMI slid to 47.5 and services fell to 48.3. Both were below forecasts and showed the Eurozone struggling the second half of the second quarter. The Eurozone current account turned into a deficit of 7.3 billion euros, seasonally adjusted. The unadjusted figure was negative 21.4 billion euros. The data reflects a worsening trade position. The deficit in goods was 3.3 billion in May, after a surplus of 7.1 billion in April. The services surplus also declined, but was still positive. The gloomy reports were reflected in weaker European stocks and a decline in risk appetite for the euro-yen pair. From its high this week near 169.90, the pair has declined almost 200 pips to test the 168 level in New York afternoon trading. The pair has stalled after a strong rally last week, and with weaker data from the Eurozone, is now in the defensive. In the UK, retail sales were down 3.9% in June, according to the government, a sharp decline and the biggest monthly drop since records began in 1986. It reverses all the gains seen last month. Consumers faced with a weakening economy, a recession in housing, and high inflation are cutting back on spending. The pound fell sharply versus the dollar following the release, giving up the 2-to-1 level it reclaimed yesterday. The pound-dollar pair traded near the 1.9840 level, a 160 pip slide from the session open, and below short-term resistance at 1.99. In the U.S., weekless jobless claims jumped back above 400,000, an increase of 34,000 compared to the previous week. The increase was the highest in 4 months and was above expectations. A weakening job market will add more pressure on the U.S. economy, which is already reeling from a housing recession and surging inflation as a result of higher oil prices. Existing home sales fell 2.6% in June to an annual pace of 4.83 million units, which was lower than forecast. Tighter lending standards continue to keep inventories high and prices falling, as there is a smaller pool of potential home purchasers. With Congress passing a massive housing bailout package, it remains to be seen if the situation improves going forward, and the news had only a slight impact on the dollar's value. One more piece of news to note is the jump in the US dollar-Canadian dollar around noontime after it was reported that the Bank of Canada injected $830 million of overnight liquidity, the largest injection since April 30th. The news caused a 50-pip jump in the pair to 1.0150. Tonight, Japan releases data on consumer and corporate price inflation. Overnight, the UK posts GDP data for the second quarter and a measure of services activity. Tomorrow, the U.S. releases information of durable goods orders, new home sales, and consumer sentiment. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.